Good morning, everyone. This is Futures Brizio. Hope everybody's doing great. It's Sunday, July 21st, 2024, 9:30 a.m. And hope everybody had a great week. Just a brief video here, kind of obviously doing this on the weekend with the market closed. But this is pretty straightforward. It's just another place to look on the chart for kind of liquidity areas that are excellent places often to enter trades. And they happen quite often, which I'll show you. And again, I'm using Heikin-Ashi Smooth candles here. But of course, you can do this with regular candlesticks too. And like I said, I don't completely ignore regular candles, as I mentioned in numerous times in past videos. I will switch on the candles to overlay on this, such as like this. When I go to enter a trade and exit a trade, take profits and stop losses, just so I can see the exact levels, because they don't always line up with the Heikin-Ashi Smooth candles. But I keep this Heikin-Ashi Smooth setting pretty short. It's set at a period of 4. So it does mimic the actual candles fairly well, but again, it's not fully accurate in picking out especially the highs and lows of the actual candlestick. So, but guys, this just has to do with just liquidity areas and places on the chart that are great places to enter or get on board with a trend. And you've probably seen this before, so this might not be anything new, but I just wanted to kind of point it out and show you how often it happens. Now, this is a 10-minute chart. In fact, all these I'm going to show you on 10-minute charts. You can look at it on a 5-minute chart too, but there's just going to be more noise with it. So I just zoomed out just a little bit here just to make it a little easier to spot. And that is basically within a trend where you see equal highs, where price tries to move in the direction of the trend, then comes back and hits that same area again. Might not be exact, although oftentimes it is almost right to the tick. It might go a little bit past it. It might go a little short of it. But those are liquidity areas. And basically those are just areas in the market where large traders, feel like there's a bunch of liquidity. It's probably, either in a downtrend, that liquidity spot is either buy stops for people that, think they're going to catch a breakout to the upside, so they have buy stops sitting there, or their stop loss orders on sells, things like that. And like I said, it happens quite often on the chart. And so if we just look here, this is the NASDAQ 100. I can basically see, several here. So we've got one right here. This one's kind of odd looking, but we had price come up, and then we had it just chopped along. It tweaked up again, and then it made this new low. Okay, and then it went down. Here's another one right here. Right, price is coming down, corrected, tried to go down again, but it came back up, and then you can see we have these equal highs. All right, and then boom, we have this big sell-off. Okay, if we just scroll back on the chart. We essentially had it right here too, right? We had price right here, tried to go down, came back up, hit this area again, and then and then went down, made new lows. This area right here is technically one, right? We had this little pullback here, price came back, it did blow past it a little bit, so this is not as clean, but then it just continued lower. All right, so that's just that. Let's look at a couple of other charts. So this is copper, and you can see we had it right here. Okay, we had price come up, tried to come down, came up, equal high. So on this second high, this is where you could take the short, and you could see it went down, made a new low, chopped around. It actually did keep going down. Then we had another one right here. Okay, pull back, down, up, retest, liquidity sweep. Notice how this one went slightly past this high. This is them pushing it up. They know that people have stop losses above the recent swing that led to that new low, right? Smart money concepts, right? have this new high, you have this swing high puts in a new low, so then people tag their stop losses right in here. They run it back up, sweep out any of the stop losses that are sitting here really close, and then boom, look at this huge sell-off. Okay, another one right here. This is a textbook one, right? Again, price goes down, makes a new low, right? Here, takes out this low right here, okay, and then boom, they push it all the way back up, all right, to this entry right here. Sweep any stop losses sitting here, tap some liquidity, and then boom, the big sell-off comes. Okay, and you know, it doesn't work all the time, guys. You're gonna have times when it doesn't ever make it back, and that's okay too. You know, here's an example right here. We had this pullback. Price goes down, make a new low. It tried to come in right here, didn't quite get up here, and then it sold off. Let's just turn on the candlesticks and look at that. And yeah, even with the candlesticks, there's not like there's really a big wick. You can see where I put the horizontal line. Okay, so it's not always going to work. All right, there's just, you know, at this point right in here, there was just too much selling pressure. They couldn't push it back higher any more than they did. So, you know, in that respect, either you miss that trade or, you know, you use some other type of entry method. So, like I said, it's doesn't work every time, but if you can go back and look at your charts, you can see this happen quite often, and that's why. So here's one right here on gold. Okay, here's one right here on gold over here. Okay, this is a really wide one because it made a couple of attempts to go higher. So we had this high right here, came down, failed to make a new high. So this is your first bearish sign anyways, but you can see they pushed it up again, swept out all this liquidity, and then the real sell-off came. All right. Then we had one right here. Okay, we did not get one right here. I mean, maybe technically you can make an argument about this, but not really. But this would have been just as good of an entry. I mean, you would have missed this little beginning part, but honestly, when you look over to your left here, it's not really a big deal. So this actually was a better entry. Kind of had one right here, and then these little entries on the way down. We really didn't get one here. We technically did have one right here, okay, and you know, potentially we're actually setting up for one for next week, maybe, I don't know. But if you look at this, so we had gold put in this low, came up here, okay, and then tried to go down, failed, and now it's kind of started moving sideways. So let's see if this comes up, tries to come back to this high, you know, pop above the moving average, and then go down. So we'll just keep an eye on that. I don't know if it's going to do that. It might just sell from here. I don't know. But this could be one that's potentially setting up where we'll see price, you know, at the open, push up a little higher, sweep some liquidity above here, and then go down. So that's just one to keep an eye on. Let's see here. This is wheat. So we have one right here in wheat. Let's see what else we have here. This is almost like a triple one right here, right? We basically have 3 hits, but essentially just these 2 here alone would have been good. So you can see, you know, it happens pretty often. And then we already looked at NASDAQ. So those are the 4 that I have up here right now. And wheat, I'm kind of undecided about continuing to trade wheat. The trading hours of wheat is really weird, and it's hard to get in and out of positions if you don't remember the exact times that it's open, when that market is open. It has pretty short trading hours, unlike all these other assets, which pretty much trade, you know, 23 hours a day. So at least you can, I don't necessarily get into trades at odd times, but sometimes I have a trade running and I want to get out of it during the overnight hours. I can still do that with these other assets. So yeah, so basically, guys, that's it. You know, it's just equal high liquidity sweeps. Now you have to, you know, look at these within a trend, kind of know that the market is trending. But if you're looking for a place, a relatively low risk area to get to resume the trend and to get the, you know, a really good fill, then this is a great way to do it. Now, of course, it happened the opposite way with equal lows in an uptrend. So if you're looking to jump back on an uptrend, then you know it would work probably the opposite way. Every one of these things I just showed you were all in downtrends, so you know that's just the way it was. But if we kind of scroll back here, try to find an uptrend, you know, here's a little one in gold right here. Here's probably another one right here, right? Price comes down, up, comes down again, back to this area, and then starts to go up. So it would just be the opposite for uptrends as it would be for a downtrend. It would just be the opposite side, right? We'd be looking at equal swing lows instead of equal swing highs. All right, so should be pretty easy to spot. And again, guys, it's not perfect. You won't see it every time. But if you're looking for, you know, just to have a very simple way of trying to enter, then this is a great way to do it. Again, will you, if that's the only method you use, are you going to miss trades? Yeah, you will, because not always is it going to provide you with that equal high. Sometimes it just won't. It'll just fail, and then that'll be it. And the trend will resume before that equal high or equal low are met. But it does happen quite often, and those times when it happens do offer really excellent low risk areas to get in, because prices pull back, and then it's pulled back again to that same spot, and that's the golden area to look for. You know, like in this case, you know, once it hits that second, once it comes back to that area again, like right here, down, comes back here again, as soon as it makes that first red candle, whether it's a Heikin-Ashi or regular, as soon as it makes that first red candle close, that's your entry. So this first red candle right here is the entry. All right, because we made this equal high, we come back up, and then as soon as we start to break that and go back the LOA, that's your entry. Then at this point, you put your stop above the high of this candle right here, maybe a couple of ticks above, and that's it. And then you should be good. And then you can see here, you know, it went down, made a new low, pulled back, and then it really broke lower after that. And you know, it's the same thing right here, right? So when it comes back up, makes this equal high, the first red candle is your entry. So right here is your entry. You put your stop a couple of ticks above this high, right? And that's it. And then look at this huge downtrend. And you wouldn't have had to avoid about, you know, trying to catch it in other spots because you're already in this trend. Now, of course, you could add to it. Maybe potentially there was a little area right here, maybe on a short time frame. You could have found this. I don't know what this looks like on a 5-minute or a 1-minute chart. It's just kind of sideways, so it's not really very visible. But essentially that is, you know, another area. Then you had another area right here. You know, you could have gotten in. There's basically one right here too, again on a short time frame. This little area right here, right? Price comes down, up, down, up. We basically have these two areas right here. You could have looked at this area right here, but you see they swept it one more time. So this one's this is almost like a triple top. There's another one right here, right, down, up. Okay, so there's multiple areas where you could do this, but the best areas to do it are, you know, if you can find it on that little bit longer time frame, you know, and I happen to have this 50 period moving average on here. You don't even need the moving average. But when price comes back and interacts with this moving average, especially if it pops above it a little bit without breaking all the structure, but it just pops above, these are really low risk value areas to get in. So this is a perfect area right here. So that's it, guys. I'm going to leave it there. Again, hold on one sec, guys. All right, so any questions, comments, leave them down below, and we'll talk to you guys in the next video. Make sure you smash that like button on the way out, and we'll talk to you all soon. Have a great weekend, guys. Talk to you next week.